We just need to keep paying attention to the data. Some of the most recent inflation data on some measures is a little softer than we had thought might come in. So maybe there's some evidence that things are starting to soften just a hair, but we just need to keep paying attention to the data and seeing where it comes out before we can draw any conclusions.
How's it going, everyone? It's Sam. That was just the Minneapolis Fed president talking about inflation. He talks about asset inflation as well. And I'll play the longer version of that clip for you at the end of the video, but I want to talk about what Biden just said. I had said in previous videos that he was going to talk about inflation here today. I want to cover that and then also talk about what to expect out of tomorrow's CPI reading. Now, if you guys don't mind hitting the like button and subscribe button, I appreciate that. There's a link underneath the video to BlockFi. They're giving up to a $250 bonus in Bitcoin when you sign up, which is a lot of Bitcoin now with the price going down. Also, you do have to make a deposit, so just know that as you deposit more, you get more of a bonus. There's also a link down there to Unstoppable Domains to get a readable wallet address. Makes it a lot easier to receive crypto, so you can get something like sam.wallet. Definitely check out both of those underneath the video. Now, like I said, I'll play the longer version of this clip. He does talk about how basically one of their goals was to lower asset prices, and that's because a lot of people are feeling really wealthy. So that is just kind of a positive thing that they were able to do, because when people feel really wealthy, they spend more on stuff and then the inflation rises. So to get to decrease, makes sense to drop some of the markets. Now, he didn't phrase it just like that, but it's pretty much what he's saying. He's also saying that people that didn't have real estate and stocks still had a really healthy balance sheet. So I'll play that again, longer version towards the end of the video, but let's talk about what President Biden just said about inflation. Now, I would not suggest going and watching this video. The first half of it is nothing. The second half, they were trying to figure out how to get the volume at the right amount, the right volume. It was really quiet for a while, then super loud. So it was just really annoying to listen to. I do have a little summary here though, and it's not exactly what I thought. So I had said in previous videos that he was supposed to talk about several different things, from releasing 1 million barrels of oil a day for the next 6 months to try to decrease the price of gas. So this is coming from CNN. I'm not getting political here, but basically they even didn't like what he said. He basically just talked about what Republicans were trying to do, what he was trying to do, how they need to tax wealthier families and tax companies, all that kind of stuff. So it wasn't really like he said anything really important. Kind of just was a political speech, it seemed like, that he was just trying to push people to his side. And I'm not trying to get political. I don't want you guys to get political in the comments. It just seemed like nothing to me. It seemed kind of worthless. Even though he was supposed to make some good points, I don't think he really did too much. We do have CPI coming out tomorrow. Everyone's going to be watching it. We did see the markets recover a little bit earlier today. We had NASDAQ go up to 2.7% up on the day, then go all the way down to the negative 0.4 or 0.5 range. And then we're back in the positive as of the time of this recording. A lot of people trying to move positions around ahead of tomorrow's CPI reading. Now, the consensus is that we have a drop in CPI down to 8.1% from 8.5%. If this happens, I think the market will take it as a good sign. Now, we've seen fake rallies before, but I think this would be a good sign because, first of all, assets have fallen down 10% over 3 trading days. The NASDAQ's fallen down 10%. We have seen a ton of fear in the market. We've seen inflation start to come down now. The Fed's already talked about how they're not going to raise prices, or they're not going to raise rates too much if we see a little bit of a U-turn. And now, what I'm about to show you is they've already seen some inflation numbers come in already ahead of the CPI data, and they've already come down a little bit. So that's probably a good sign for tomorrow. Now, if we get this 8.1%, I think it's going to be good for the markets. Now, we might not actually rally for a little bit longer. Maybe some people just think this is a blip and there are bigger, longer term issues going on right now. I think it will be a good sign. And if we get 8.1%, I'll be happy. Obviously, if we get higher than that, we might sell off a little bit more, but I think a lot of fear is already priced in. The crypto market's down a lot. The stock market's down a lot. Housing seems to be softening a bit. We haven't seen a big drop in that like we have seen the other asset prices. But that is where we're sitting at now. So 8.1%, pay attention to that. Biden didn't really talk about anything. And then this is the Fed president and what he said on inflation just yesterday. So I'll play this for you.
You just said you don't focus so much on the stock market unto itself, but you do focus on the psychological impact of the price of assets. And effectively, what I imagine you're saying is the wealth effect or the lack of a wealth effect. Given where you've seen assets move over the last month, how do you think that psychology has changed? Do you think that, and also given some of the other numbers you were just talking about in terms of how much household wealth families have, how much more does that have to come down to change the psychology?
Well, it's a good question. You know, when I think about this regime that we might be in a higher pressure equilibrium, the wealth effect is part of that. So stock prices were very high relative to pre-pandemic. Home prices very high relative to pre-pandemic. And then even the lower income households that don't own stocks or don't own a home, many of them have much stronger, healthy balance sheets than they had before the pandemic. My theory is that all of that is leading people to feel more confident and to spend more. And maybe that's what's pushing us into this higher consumption, higher spending, higher inflation regime. So yes, the stock market has come down. Home prices are still very high. The latest data is they've still been quite robust, even though mortgage rates have climbed quite a bit just over the course of this year. And again, household balance sheets continue to be very strong. And so, you know, we just need to keep paying attention to the data. Some of the most recent inflation data on some measures is a little softer than we had thought might come in. So maybe there's some evidence that things are starting to soften just a hair, but we just need to keep paying attention to the data and seeing where it comes out before we can draw any conclusions.
Thank you guys, and I'll see you in the next video. Bye.